Today we are discussing about major important recommendation made by the GST Council in its 48th meeting, which is held by virtual mode in New Delhi. This video has been prepared specifically for the students of AITCS. If we see the press release issued by the GST Council on 17th December 2022, then we shall find that the major recommendation of the Council can be divided into four parts. That is, Part A, recommendation for changes in GST rate. Part B, clarification with respect to certain ambiguities in tax rate. Part C, measures for facilitation of trade. And Part D, measures for streamlining of compliances in GST. We shall discuss about the four parts which the Council has recommended. So, if you come to the Part A, that is the recommendation for change in GST rate, we shall find that in case of goods, the Council has recommended to change of two rates, that is husk of pulses including silka and concentrates including chuni or churi khanda. This means the word which has been used commonly known as the cattle feed. We can say that when the notification will be issued for effecting the rate, then the GST rate on cattle feed will be nil. At present, GST rate on cattle feed is 5%. Secondly, what the Council has proposed to change the rate, that is regarding of ethyl alcohol supplied to refineries for blending with motor spirit, that is petrol. At present, GST rate on ethyl alcohol is 18%. That has been proposed to reduce to 5%. Apart from proposal for the changes of two GST rates, it has also been decided to include supply of mentha ardensins under reverse charge mechanism as has been done for the mentha oil. So mentha oil is at present under reverse charge mechanism. Reverse charge mechanism means here the registered dealer who is purchasing mentha oil is liable to pay GST under RCM. The farmer or supplier of mentha oil is not supposed to pay GST. Similarwise, mentha ardensis is a medicinal plant. This plant is used for the preparation of certain medicines. Till date, supply of mentha ardensis was not under RCM, but now the GST Council has proposed to include it under RCM as it is for mentha oil. Accordingly, the purchaser of mentha ardensis is liable to pay GST under reverse charge mechanism. Now come to part B, that is a clarification with respect to certain ambiguities in tax rate. Here the GST Council has tried to clear certain doubts which is at present prevailing over the certain goods. For example, the Council has tried to clarify that Rab solvent, it means molasses or jaggery, is classifiable under CTS custom tariff heading 1702, which attracts GST at the rate of 18%. That means from the date of the notification, The RAP, that is molasses, will be classified under CTS 1702 and the GST rate will be 18%. Further, it has clarified that fryams is a type of snacks. Fryams manufactured using the process of extrusion is specifically covered under custom tariff heading 19059030 and attract GST at the rate of 18%. So in this regard also they have made clear that fryams is taxable at the rate of 18%. Again, the council has tried to clarify that the higher rate of compensation cess of 22% is applicable to motor vehicles which fulfill all four conditions. Namely, it is popularly known as SUV. SUV means sports utility vehicles. Has engine capacity exceeding 1500 cc, its length exceeding 4000 mm, and the ground clearance is 170 mm or above. Here the classification has been issued with regard to the compensation cess. So what is the compensation cess? Compensation cess is an extra tax which is collected on and above the GST amount. For example, if any goods or services where the amount is 100 with respect to tax, then 22% will be additionally charged. So in case of SUV vehicles, 22% compensation cess will be levied. If that vehicles categorically satisfied four conditions. Condition 1, it must be SUV. Its engine capacity should be more than 1500 cc. Its length should be more than 4000 mm and ground clearance will be more than 170 mm. Next, the board or council has also clarified that goods falling in lower rate category of 5% under Schedule 1 of Notification Number 1 of the year 2017 Central Tax Rate imported for petroleum operations will attract lower rate of 5% and the rate of 12% shall be applicable only if the general rate is more than 12%. Here they went to clarify that those goods which is placed under Schedule 1 of the Notification Number 1 of 2017. We know that GST is made applicable from the year 2017 and this is the first notification. In this notification, they have given various schedules under which various goods and services has been kept. For example, under Schedule 1, they have kept all the goods which is taxable at the rate of 5%. In Schedule 2, they have placed the goods which are taxable at the rate of 12%. And Schedule 3, 18%, Schedule 4, 23%, and so on. So the council has made attempt to clarify that the goods which has been placed under Schedule 1 and attracts 5% GST will continue to attract 5% GST until the general rate is exceeding 12%. Again, the council clarifies that as a relief measure, the council decided to liberalize the intervening period starting from the date of issuance of circular dated 3rd August 2022 In respect of GST on husk of pulses, including chilka and concentrates, including chuni or churi khand on as-is basis on account of genuine doubts. It means there was a earlier circular dated 3rd August 2022 where the council has prescribed GST rate. Now they are saying that GST rate 5% will be converted to nil. So for the removal of the doubt, they said that the intervening period from 3rd August 2022 till the notification is published for making the GST rate to nil, the GST rate will be as is basis. Means whatever has been charging, that will remain valid. Again, they has clarified that no GST is payable where the residential dwelling is rented to a registered person if it is rented in his or her personal capacity for use as his her own residence and on his own account and not on account of his business. There is certain ambiguities regarding taxability of the residential house or apartment. So in this council meeting, they has clarified that if any registered person rents dwelling house to another registered person or any unregistered person gives on rent of residential dwelling house to another registered person for his or her own residence use and not on account of business, then no GST is payable. That means any residential accommodation accorded by the registered person on his personal use, not for his business use, shall not attract GST, even the person is registered under respective state GST law. Again, there is a clarification that incentive paid to banks by central government under the scheme for promotion of RuPay debit cards and low value Bhim UPI transaction are in the nature of subsidy and thus not taxable. We know that the bank tries hard to promote Ruby debit card and low value Bhim UPI. And for that work, the central government pays certain subsidy to the banks for the promotion of the Ruby debit card and Bhim UPI. As this amount which is received by the bank from the central government is in the form of subsidy, so there is no GST applicable on that. Now comes to part C, measures for facilitation of trade. The GST Council has recommended certain measures which will facilitate for the smooth functioning of the business. So what are the recommendations? We shall see here in the form of points. That is point number 1, decriminalization of offences under GST. There are certain offences which was under criminal law, now that they have been decriminalized. Number 2, refund to unregistered person. Number 3, facilitate e-commerce for micro enterprises. Number 4, proportionate reversal of ITC for non-payment to supplier. Number 5, mechanism for reversal of ITC by registered person in case non-payment of tax by the supplier. Clarity on submission of certified copy of appealable order. Withdrawal of appeal by registered person, and at last, cancellation of registration of TCS Purpose. There are total 8 measures which has been proposed in this meeting that will lead to smooth functioning of the trade. Now we shall discuss all the measures for facilitations in detail one by one. First, which is the major reform which has been proposed by the GST Council in this meeting is decriminalization under GST. The Council has recommended to raise the minimum threshold of tax amount for launching prosecution under GST from ₹1 crore to ₹2 crore, except for the offence of issuance of invoices without supply of goods or services or both. At present, if any taxpayer or if any supplier is found guilty for the offences of tax evasion where the amount is ₹1 crore, then the offences comes under the category of criminal offences. Here, criminal offences means the provisions which is laid out under IPC, Indian Penal Code, is applicable. In this case, the GST officer has authority to arrest the person and he can be booked under the related provision of Indian Penal Code. Now, with this rectification, the government has tried to raise the level of the offences to 2 crore. Means, after the notification for the implementation of this proposal, if it is found that any supplier or registered person has committed a crime where tax evasion amount is more than ₹2 crore, then only prosecution will be launched. Below the rupees of 2 crore, the GST authority shall have no power to prosecute them, although the dealer will be triable under the relevant GST law. Here, there is one exception. The exception is regarding issuance of tax invoice without supply of goods or supply of services or both. In case any supplier is found guilty of supplying invoices without actual supply of materials or actual supply of services, where the value of the supply is ₹1 crore, then he shall booked under the appropriate sections of Indian Penal Code and prosecution will be tried in the appropriate court of law as a criminal offence. In this case, the threshold limit is same as it is now, that is ₹1 crore. Secondly, they have proposed to reduce the compounding amount from the present range of 50% to 150% of tax amount to the range of 25% to 100%. At present, as per the GST Act, the amount payable for compounding of offence shall be 50% of the tax amount involved, subject to minimum 10,000, and maximum amount for compounding is 150% of the tax or ₹30,000, whichever is higher. So, before knowing what these measures, we have to know what is the compounding of offences. In GST law, there are certain offences which is punishable by fine or jail term or both. The offences which is punishable by fine and jail term can be compounded. Compounding means conversion of prosecution matter to fine. Suppose that a person has been booked for certain offences where the provision in the law is for a jail term of 2 years and fine of ₹25,000. In that case, the person or registered dealer can apply for the compounding of offences by paying the compounding fees, which is supposed to be changed from 50% to 150% or 25% to 100%, which is supposed to change from 50%, 150% to 25% to 100%. In that case, after paying the application for compounding fees, the offences will be compounded and the registered person will not be prosecuted under the criminal law. Third is decriminalization of certain offences, which is specified under clause G Clause K of subsection 1 of section 132 of the GST Act, which obstruction or preventing any officer in discharge of his duties, deliberate tampering of material evidence, failing to supply of information. At present, there are certain law which is criminalized. That means if you obstruct or prevent any GST officer in discharge of his duties, you will be triable as a criminal. Or you deliberate or tamper any material evidence, will be triable as a criminal. If any information is sought from the GST department and you fails to provide that information, then you will be triable as a criminal. But after the notification will publish which give effect to this recommendation, these offences will not be more as a criminal offences. That means if any person will obstruct or prevent any officer in performance of his duty, the offences will not be treated as a criminal offence and it will not be triable under IPC. Similarly, deliberate tampering of material evidence or failing to supply of information will no more longer will be triable as criminal offence. The sections of Indian Penal Code will not apply and the person will be put as per the GST law. Secondly, there is a proposal to refund to unregistered persons. Before explaining this recommendation, we should read the recommendation of the council in dicto. That is, there is no procedure for claim of refund of tax borne by the unregistered buyers in cases where the contract or agreement for supply of services like construction of flat or house and long-term insurance policy is cancelled and the time period of issuance of credit note by the concerned supplier is over. The council recommended amendment in CGST Rule 2017 along with issuance of a circular to prescribe the procedure for filing application of refund by the unregistered buyers in such cases. If we explain this proposal, then we find that at present there is no mechanism in GST which leads the way for refund of tax to unregistered person. For example, that you as an individual person entered into agreement for purchase of flat and the promoter has taken from you the GST amount. If that contract is cancelled, the promoter will not refund you GST amount. And there is instances where it is found that the GST collected by the promoter is not deposited to the government. If it is deposited, then they will issue a credit note and as a result, they will adjust that value with their output liability. You as an unregistered person is not able to claim the refund of the GST amount which is paid to the promoter. In this recommendation, the GST Council has proposed that there should be a mechanism where the unregistered persons will be able to file the refund application online in case the construction agreement or agreement or purchase of land is cancelled. So when this mechanism will be implemented, then hopefully the unregistered persons will be able to raise refund application online through GST Common Portal. Now again, there is a facilitate e-commerce for micro enterprises. GST Council in its 47th meeting had granted in principle approval for allowing unregistered suppliers and composition taxpayers to make intra-state supply of goods through e-commerce operators, subject to certain conditions. The Council approved the amendments in the GST Act and GST rules, along with issuance of relevant notification to enable the same. Further, considering the time required for development of the requisite functionality on the portal, as well as for providing sufficient time for preparedness by the e-coach, Council has recommended that the scheme may be implemented with 1st October 2003. That is, from now it is 9 months to go for the benefit. Through this recommendation, the Council has said that they have granted in principle approval. What is in principle approval? In principle approval is that they have given the approval subject to the final decision. So they have given the permission for unregistered person or composition of taxable person to make intra-state supply of goods through e-commerce operators. Through this recommendation, they have said that the unregistered person who want to sell their products or services online through e-commerce operators such as Amazon or Flipkart, by fulfilling certain conditions, they can enlist themselves on the portal of the e-commerce operators. It is reminded that at present, whenever any unregistered person will try to register with e-commerce operators such as Flipkart or Amazon, then the platform of the e-commerce operators will not allow to register unless he has a valid GST registration certificate. If this recommendation is implemented, hopefully from 1st of October 2023, then the persons who are not registered under GST will also be able to sell their products intra-state. Now, there is also a proposal for proportionate reversal of ITC for non-payment to supplier. If we read this recommendation, then we find that the Council has recommended to amend Sub-Rule 1 of Rule 37 of CGST Rule 2017 retrospectively with effect from 1st October 2022 to provide for reversal of input tax credit in terms of second proviso to Section 16 of CGST Act only proportionate to the amount not paid to the supplier vis-a-vis the value of the supply including tax payable. Rule 37 sub-rule 1 deals with reversal of input tax credit where the amount is not paid to the supplier within 180 days. That means, as per the present rule, if any registered person fails to make payment to his suppliers within 180 days, then the ITC availed on the purchase from that supplier will be reversed in full. But through this recommendation, the GST Council has proposed that the registered person who has a billed input tax credit from a supplier but fails to pay within 180 days is not required to reverse the ITC in full but proportionate to the amount which is not paid to the supplier within 180 days. Again, they have proposed to develop a mechanism for reversal of ITC by registered person in case non-payment of tax by the supplier. If we go through the recommendation, then we find that the Council has recommended to insert Rule 37A in CGST Rules 2017 to prescribe the mechanism for reversal of input tax credit by a registered person in the payment of the event of non-payment of tax by suppliers by a specified date and mechanism for reavailment of such credit if the supplier pays tax subsequently. This is the process for complying with the condition for availment of input tax credit under section 16 subsection 2 clause C of CGSTR 2017. That means with this proposal, the council has recommended that they should develop a mechanism where the registered person who has purchased the goods and fails to payment the supplier within 182 days is be able to report on the portal when he has paid the actual amount, and in that way he will be able to avail the credit. The government has also issued a clarification on submission of certified copies of the appealable order. Sub-Rule 3 of Rule 108 and Rule 109 of the CGST Rule 2017 to be amended to provide clarity on the requirement of submission of certified copy of the order appealed against and the issuance of final acknowledgement by the appellate authority. This would facilitate timely processing of appeals and ease the compliance burden for the applicants. If we explain this recommendation, then we find that at present there is no specific guidelines, there is no specific rules against production of certified copy of the orders against which appeal is being filed. Today, if we file an appeal to the central GST authority or state GST authority, the rule is valid. For example, in certain cases, they shall ask the certified copy of the order against which appeal is being filed, and the certification must be done by the officer or authority who has passed the order. At the other hand, in certain departments, they are saying that certification by the officers which have passed the orders is not required. It shall be self-certified by the person who is filing the appeal. So there is no clarity whether certified order is required or not. Whether certification shall be done by the officer or authority who has passed the order, or certification will be done by the dealer themselves. Through this recommendation, they have said Rule 108, Sub-Rule 3 and Rule 109, which is related with the production of the certified copy of the order, shall be accordingly amended to clarify that whether certification is done by authority or by the dealer himself or herself. Number 7, withdrawal of appeal by registered person. Rule 109C and Form GST APL 01 or 03W to be inserted in the CGST Rule 2017 to provide the facility for withdrawal of an application of appeal up to the certain specified stage. This would help in reducing litigation at the level of appellate authorities. At present, there is no mechanism for withdrawal of appeal. Once appeal is filed in the form of APL 01 by the taxpayer or appeal is filed in the form of APL 03 by the department, that cannot be withdrawn. There is no provision in the GST Common Portal for the withdrawal of the APL 01 or APL 03. Through this recommendation, the Council has advised that there will be one form APL 01W or APL 03W. W means withdrawal. When this notification will be effected and accordingly provision shall be made for this form, then the dealer will be able to withdraw the appeal by filing appeal 01W, or department will be also withdraw appeal by filing APL 03W. Cancellation of registration, TDS or TCS purpose. Sub-Rule 3 of Rule 12 of CGST Rules 2017 to be amended to provide for facility to the registered person who are required to collect tax at source under Section 52 or deduct tax at source under Section 51 of CGST Act 2017 for cancellation of their registration on their request. We know that there are certain categories of enterprises or there are certain categories of institutions who generally do not require to get themselves registered under GST because they do not deal in providing goods or services. If they are also engaged in the providing goods or services, they are exempted. In spite of that, under GST law, they are supposed to take registration if they are liable to deduct TDS or if they are liable to collect TCS. For example, our government enterprise or government organizations who are otherwise not supposed to take GST registration are liable to take GST registration because they are liable to deduct TDS. So they are allotted GST number based on their tag. Similarwise, all the e-commerce operators are liable to collect TCS from their customers and they are also compulsorily liable to take GST registration. But unfortunately, there is no provision if they want to surrender their GST certificate or cancel their GST certificate. Through this recommendation, the Council has advised that there should be a mechanism where these persons who have taken registration based on TAN will also be liable to make online application for the cancellation of their registration number. Part D. Measures for streamlining compliances in GST. The Council has recommended that the certain steps will be taken in future so that the compliance will be easy. So let us see what are the compliances streamlining proposal by the GST Council. First one is biometric based Aadhaar verification. Proposal has been made to conduct a pilot project in the state of Gujarat for biometric based Aadhaar authentication and risk based physical verification of registered applicants. Amendment in Rule 8 and Rule 9 of the CGST Rules 2013 to be made to facilitate the same. This will help in tackling the menace of fake and fraudulent registration. So the Council has proposed to start a pilot project that will be started from the state of Gujarat, where the Aadhaar authentication will be based on the biometric. Nowadays, when we apply for the GST registration, then the Aadhaar verification will be done through a link which is sent to the email ID which is provided at the time of registration. When the person click on that link, OTP is received to the mobile number which is registered with Aadhaar. After entering that OTP, the verification procedure is complete. But this is further being improved through this proposal. Here, the Aadhaar authentication will be done on biometric basis, not on one-time password received to the mobile registered with the GST portal. Second one is PAN verification through Central Board of Direct Tax CBDT database. The Council has proposed that PAN linked mobile number and email address fetched from CB database to be captured and recorded in GST REG1, and OTP based verification to be conducted at the time of registration on such PAN linked mobile number and email address to restrict misuse of PAN of a person by unscrupulous elements without knowledge of the said PAN holder. At present, if any person uses the PAN of a particular person and take GST registration number on the basis of the PAN, then the PAN holder may not be aware of that, because the OTP which is received, that is not associated with the income tax database. The GST Council has recommended that once the notification will be issued and there will be a provision in the GST portal, then the email address and mobile number which is available to the income tax database, that will be automatically fetched at the time of the registration, and the OTP will be received to that number which is actually linked with the income tax department. In this way, there is a possibility that the misuse of the PAN of a PAN holder may be stopped. Restriction of GSTR. Section 37, that is related with outward supply, that is GSTR1. Section 39, that is related with GSTR3B. Section 44, related with annual return. Section 52, related with TCS and TDS of CGST 2017 to be amended to restrict filing of returns or statement to a maximum period of 3 years from the due date of filing of the relevant return or statement. At present, there is no restriction of filing of these returns or statement. By paying a late fees, registered person can file these returns up to unlimited years if the registration is not cancelled suo motu by the registering authority. So, by this amendment, the council has recommended that these returns or statements will not be allowed after the expiry of 3 years from the due date of filing. Intimation of difference between GSTR1 and GSTR3B, that is proposal to introduce BRC01B form. Rule 88C and form GST BRC01B to be inserted in CGST rules 2017 for intimation to the taxpayers by the common portal about the difference between liability reported by the taxpayers in Form GSTR1 and Form GSTR3B for a tax period where such difference exceeds a specified amount and or percentage, for enabling the taxpayer to either pay the differential liability or explain the difference. Further, clause T to be inserted in sub-rule 6 of Rule 59 of the GST Rules 2017 to restrict furnishing of Form GSTR1 for a subsequent tax period if the taxpayer has neither deposited the amount specified in the intimation nor has furnished a reply explaining the reasons for the amount remaining unpaid. This would facilitate a taxpayer to explain the reason for the difference in such liabilities reported by them without intervention of the tax officials. See, nowadays, there is a no mechanism to report difference of liability reported in GSTR1 and GSTR3. When we receive notice regarding mismatch of GSTR1 and GSTR3B, then only we act upon that. The council has recommended that there will be an introduction of a new form, that is GRC01B. Here the registered person will have to state why there is difference between GSTR 1 and GSTR 3B. There shall be an option where she shall explain the reason. If the reason does not result in the less payment of tax, then it is okay. If there is a resulted in less payment of tax, then he has to deposit that tax amount. So DRC 01B will be an intimation for reporting difference between GSTR 1 and GSTR 3B. OIDR definition amendment in definition of non-taxable online refund under section 2116 of GST Act and definition of online information and database access or retrieval services under section 2 subsection 17 of GST Act so as to reduce interpretation issue and litigation on taxation of OIDAR services. OIDAR services is related with the online gaming, downloading of software, or downloading of anything which is available on internet. Section 2, subsection 17 is highly litigation, where the interpretation is sometime in favor of the assessee or sometimes in the favor of the department. So the government has proposed to amend the definition to bring the clarity which services is under OIDAR services or which services will be treated as import of services. Now, in this proposal, in this recommendation of the GST Council, which we have missed, is that the Council has not discussed about most crucial issues, that is the setup of GST Appellate Tribunal. Since implementation of the GST in the year 2017, 5 years has gone, but the government fails to set up GST Appellate Tribunal. In absence of the Appellate Tribunal, the taxpayers who are aggrieved by the order of the first GST Appellate Authority is bound to move to the High Court to get the justice. Every taxpayers may not have resources to bring the case before the High Court. So they are deprived of the GST. GST Appellate Tribunal should be set up at the earliest, but unfortunately, they have not discussed about the setting up of GST Appellate Tribunal. Note, in this particular press release, the government has given a note, and the note is that the recommendation of the GST Council have been presented in this release containing major item of decision in simple language for information of the stakeholders. The same would be given effect through the relevant circulars, notifications, amendment of laws, which alone shall have the force of law. That means whatever has been recommended by the GST Council, whatever have been proposed by the GST Council in this 48 meeting has no force of law until they are effected through the relevant notification or circular. So we have to wait when the circular, notification and amendments will be notified. After that, this proposal will be valid in the eye of law. So this was the discussion about the most crucial and important announcements and recommendation made by the GST Councils in its 48th meeting. If anyone has any confusion or anyone needs certain clarification regarding this discussion, then he can WhatsApp his query my mobile number 9836876688 or email to aitcs2011@gmail.com. I shall answer the query and try my level best to convince and furnish an explanation. Thank you very much. for the explanation on the recommendation of the GST Council in its 48th meeting.